Good morning, everybody. Welcome to the Siler Wealth Management video blog. We are March 31st, Thursday, March 31st. Also happens to be the last trading day of the quarter, and what a wild quarter it has been. Of course, well documented. I've talked to you about it. January, February, absolutely awful. March has been a really, really incredible quarter and really getting back much of those losses from the first 2 months of the year. So that's impressive. Now, going forward, the concern has to be corporate earnings, because corporate earnings are going to be down for the fourth quarter in a row. That's not typically a great sign. That's what has me concerned going forward with the market. We had a rebound, and that's good. I think from this point, we have to watch closely what's going on around us. All right, I don't know how much upside we have left. I don't think the market's going to fall apart, but could we pull back 10%? Absolutely could. Now, keep in mind, the estimates for the quarter, for earnings for the first quarter for the S&P 500 is to be down 8.7%. Stocks are supposed to move, this is the way it's supposed to be, on earnings and or anticipation of earnings. So if earnings are down, stocks have just gone up, it's typically not a great sign going forward. So April is usually a pretty good month. I already talked about that. March and April, the best 2 months of the year, so April's still okay. Earnings won't get cranking until about the first week or so of April. I mean, starting the second week of April, so we'll start seeing that. There's going to be a lot of impressive things we got to look for. I mean, we have to look for a lot of these companies that have made moves, like Apple, like Facebook, like Netflix. Those stocks have made big moves. We have to see now how that translates to the bottom line for them, because if their earnings aren't up to par, the stocks could take a big hit. Now, tomorrow is the big jobs report. First Friday of the month, expect from the Commerce Department, tomorrow happens to be the first, and they will give a jobs report. They'll say that we probably added, estimate, 205,000 jobs. It was 213. It's anywhere from 205 to 213,000 jobs for the month of March. Now, last month was 242,000. What's a little bit disconcerting to me is that the jobless claims report that came out today was a little bit more than expected. And I read headlines all day long, and just kind of start being cognizant of this. You start seeing headlines: Boeing laying off employees. I saw BlackRock laying off employees. So I'm starting to see more of that. So that is disconcerting, although it's not enough yet to really get me seriously concerned about the labor markets, because we are, for the most part, at full employment, at 4.9%. We're pretty darn close to full employment. Now, so that's why I've got some concerns in the market going forward. Be cautious. What I would do is, if you're current, don't go out and sell things blindly, because you've made a nice run here, but you have to watch what you have, and if it starts pulling back aggressively with some heavy volume, and certainly you could just call me, we can talk about your portfolio, it doesn't, that's fine. But what you want to look for is some heavy volume to the downside. We are not seeing heavy volume to the upside. So that is another concern of mine, as that the market's going up, but there's no heavy buyers out there. So let's talk about an individual stock. Tesla, ticker symbol TSLA. We don't own the stock. I have owned it in the past. We made really good money in it one time, and I got out lucky before it got murdered. Just one of those things. I had a feeling. But there is a line outside the Tesla dealership here in Central Florida, and because they're coming out with a new Model 3 that's going to compete with the Leaf and going to compete with the BMW electric car, because the price range is going to be about $35,000. So Tesla has really been in a market in which only 2% of cars that sell are over $75,000. So it's a really small niche market, and Tesla certainly has that niche market, and the cars are beautiful. I mean, if you've ever test driven one of those, the new Teslas, they are incredible. I just can't see spending $90,000. Sorry, and I'm not a tree hugger, but anyway, I can't see spending $90,000 on a car that you're only going to be able to drive 250 miles before having to charge up. And who knows if at the charging station you have to wait 2 hours. I don't know. That's not something I want to do. But for some of you, it works out great. If you're only running back and forth to the store, your job is close, maybe it works out. But anyway, there's a line outside of the Tesla dealership. I saw it this morning in the news in Central Florida, because you can put your $1,000 deposits down on the new Model 3, which is going to run around $35,000. And I have to tell you, the Tesla technology is really phenomenal. And I really got a chance when I test drove it. It's got a lot of features. Now, again, I don't know what this Model 3 is going to have versus the past models, but it probably, if I know Tesla and we know Elon Musk, who's an innovator, it's probably going to be pretty impressive. Now let's talk about their stock. And again, this is not a buy recommendation whatsoever, because this stock is certainly not for the faint of heart. I don't own it. I don't plan to own it. I'm not buying it, just so you know what's going on. The stock in mid-February was at $140 a share. Today, it trades, or yesterday, closed at around $225. Big move in about a month and a half, maybe in anticipation of this launch. What typically happens is stocks do move up in anticipation of these big launches and events, and then oftentimes do sell off after that. So something to watch. Okay, I'll be watching it closely and then see if there's some kind of opportunity, not for the long side, meaning not for the upside, but maybe for the downside, for those of you that are willing to take some risk and want to short some things. I'm not saying it is, but let's just keep an eye on it. But typically, and this the term we like to use is you buy at the funeral, sell at the wedding. All right. So that being said, I want to talk one more thing about dividends. I've heard a lot of clients, and actually people come in the office and say, well, I think this is really safe. It has a nice dividend. Okay, well, I like dividends. And what a dividend is, when a company you own, it could be a mutual fund or whatever, but it could be a stock, let's call it. We're talking stock dividends now. Stock cash dividends. It's great when they give back some of their profits to the shareholders, because there's two ways to make money. Capital appreciation, meaning stock price going up, or you get paid cash dividends. Most of the big companies out there, they pay cash dividends. They're giving back to the shareholders in the form of cash. Now, there's another type of dividend, of course, a stock dividend. They give you back in stock shares, but let's just talk cash dividends for now. Cash dividends are great. I love them. They are part of our portfolios. However, doesn't mean they are a hedge, significant hedge to the downside. For example, if XYZ stock pays you a 4% dividend, what that means is if you've invested $10,000 in the stock, guess what? You're going to get $400 a year in cash dividends. That's not too bad. If the stock goes up, let's say 10%, now you've got a total return, dividends, and capital appreciation of 14%. That's how it works. So that's great. But a 4% dividend doesn't help you so much. Well, yeah, it helps you 4% if the stock goes down 30. So just because a stock has a cash dividend doesn't mean it's a safe stock. And my concern is, I hear people all the time that, and I talked to somebody yesterday, the reason I'm saying this, said that their lawyer said that they should put money in stocks with dividends because they're safe. Okay, this just in, there is no stock out there that is safe. Stocks are a risk investment. The stock market is a risk investment. I don't care what type of stock it is. General Electric, who is one of the most well-known, by the way, the only original company still in the Dow Jones 30, the only original, still has yet to get its price that it was back in the Great Recession of 2000 through 2002. Still, I think it's half. So that stock never recovered. You know, Enron, we all know the story, well-documented Enron. They were the 5th largest company in the world. Done. So just because companies have dividends, don't make them safe. But I love dividends. Let's just see their business model. We look for management, earnings growth, revenue growth, etc. New products, that's what we look for when we're doing analysis. Now, thank you for sharing my video. Got a lot of shares, got a lot of likes. Fantastic. I love it. Keep doing it. At some point, I'm going to be running out of cruises. All right, we have 2 more cruises for 2 to the Bahamas, leaving West Palm Beach. All you have to do is cover the port tax, which runs about $70 a person. So the rest of the weekend is gratis. So let's go ahead and look at the. I'm looking at you. I'm going to try and pick somebody out. Hold on. Oh, make it calling out. Okay, now if you share my video, you get 2 entries. So you get 2 entries. If you like my video, you get 1 entry. Because I want you to spread the word. So here we go. First winner is Roberta M. Roberta M. I'll be contacting you. Congratulations. You won a cruise to the Bahamas. And it's a Paradise Cruise Line, so it's a lot of fun. Okay. I'll go second winner here. Let's go. Barry S. Barry S. is just actually, I just noticed that name. I know Barry, but he has just been liking, or I think actually he shared the video, so he had 2 entries. So Barry S., Roberta M., you are winners for the cruise for 2. I'll be contacting you, getting them out in the mail to you. We are doing appointments for new clients coming in Tuesdays and Thursdays, because we have to really put a lot of time into our regular clients. But Tuesdays and Thursdays, call the office, private message me, email me. We'll get you scheduled. We can do after-hour appointments too if you work. We've been doing some of those as well. But anyway, it's been great talking to you today, and have a fantastic day and weekend. I'll be with you next week. I'm Lee Seiler, Seiler Wealth Management, StockDoctor.com. My new website is almost ready. It's in the approval process. So once that gets done, it'll be launched. Thank you very much. Have a great weekend.